All right. Good morning, everybody. Today's Wednesday, May 8th, and it's another episode of the Investing Systems Trading Service live swing trading show. And so here we are again. Yeah, it seems like it's been a while since last week. A lot of interesting stuff going on. And this week we have a special guest, Jeffrey, who wasn't able to attend last week, but
I
no
miss
big
one
deal.
I miss one week and now I'm all of a sudden I'm a special guest. Okay.
Yeah, no, I'm just kidding. Yeah, so I decided to go ahead and wing it on my own last week, and I just kind of, I looked at some charts and did the normal stuff and kind of blabbered on about different things. But it's always more fun when we have both of us on here. We can kind of,
I listened to the show and it sounded great. You did great. So
oh, well, thank you, thank you.
everything was super interesting.
Yeah, speaking of interesting, the market was, the market had been in like sort of this real dull kind of a, well, it wasn't really a melt up, but it was just dull, right? We had all these narrow range days, and it kept sort of creeping up, and then all of a sudden, this past weekend, the news was is that, and it's starting to come out now that China started reneging on a bunch of things that they had been negotiating on or whatever, and I guess that made Trump mad, and so he decided that this Friday they're going to slap tariffs on a bunch more stuff and all that. And so basically, this little sell off that we have here, you're talking almost a 3%. 3% from the intraday high to yesterday's low. And so this is the first actual sort of dip that we've seen in a while here. And this is based on, trade war stuff.
Yeah, well, the good news is we get all this movement out of it. So, here we need waves in the ocean. So that's the way I look at it.
Yeah, I agree. When the market's real, there's the old saying, never short a dull market or whatever. And so when the market's real dull and it just seems like it's trading sideways all day and that type of thing, even though from day to day, the stocks tend to go up and act well in that, it just seems like it seems boring for one thing, and it just doesn't seem like a normal market to me. I don't know. There's people out there that say that the market's manipulated and there's all kinds of, weird stuff going on. But quite frankly, it just, typically in the summertime, we get into what's called the summer doldrums. And I hate to see the summer doldrums start in the spring, right? So this little bit of action though is actually sort of encouraging because there's nothing better than action.
Well, it's stirring up the pot.
Yeah. I was looking at something this morning on this. This is the S&P chart, right? And I have like this little. I actually had used to have this line like down here. Like this was sort of the zone it needed to break through to get through the highs, and then lo and behold, made it up and hit a couple of nominal highs, and of course they got all excited on CNBC, and after like a month of just kind of drifting up day after day after day and a couple of good days up, nobody could think of any reason that the market would go down. I mean, it sort of got everybody ultra complacent, I would say. And there wasn't a single thing out there and I mean, all the shorts have obviously, had to have capitulated. This run up from the dead low here to the recent all-time high, this one that sticks up here, 26%. I mean, that's a pretty significant move, right? A 26% run. And then at the end of that run, the market got kind of dull. Everybody got complacent. Nobody could think of any reason for the market to go down. And then all of a sudden, out of the blue, it started with a Trump tweet of all things.
Yeah, well, there's that one day, right? That one day that kind of like was the crack in the hull a little bit. Let the water start coming in, and uh, yeah, it'll be interesting to see, how far we, pull back and then bounce, or do we keep going lower? Is this the top?
Yeah, well, I was going to ask you about this because sort of the significance of, I guess you could call this sort of a double top. I mean, it's not really a double top unless we start to get a significant pullback. Here's what I noticed though. Check this out. Look at how like up here you hit this high, you consolidated for a while, and then you took like this little dip right here, and then all of a sudden this day the bottom fell out, and that's what really kicked off. This it ended up being a 20% correction, but it all got kicked off on this day was 10-10-18, right? And so you kind of have something a little bit similar going on here. This is like sort of the shot across the bow type thing. And so if you get like a couple of days where it consolidates, but boy, look out, if we get one of those really super long range days down from here, then look out, because all of a sudden it will look like a double top.
Yeah, when you have a second, put another horizontal line over that pivot high, the big green bar. It looks like it's March, what is it, 24th or something. It's the last pivot high.
Oh yeah, I wanted to do that anyway because this is the big, check it out, like 2860 is basically I think what you're talking about here, right?
Right there.
Yeah.
Yeah. So that's really kind of the line in the sand. If we get down below that level and then put in a pivot high below that, right? Another little cycle and a pivot high below that, then watch out below. We make a move to the downside.
I did the calculations, 28, roughly like 2860 right here, and just like you say, right at the top of this particular bar or candle. And yesterday's low was 2862, and so that's sort of in the zone. But look at how that matches up back over here too. I mean, it's pretty darn close, right? If you drew it with the crayon, it would almost be perfect, because you can see that it matches up with this low, sort of. It was support back here. The market went through it. It acted as support a couple times, and then once it got violated, and then of course over here, it's acting as support and resistance and support too. So, yeah, I think. But here's the interesting thing: is that level right there that I just drew coincides with the 3% dip. I mean, it's basically, that's where it becomes a dip. They always talk about buying the dip, so that's 3% off the top there. I wanted to look at something else kind of interesting. Let's look at here's something interesting on the Dow. On the Dow weekly chart, check this out. This is kind of interesting because there's like this zone that I have, kind of a big zone up here, but I mean basically you can see that this thing has acted as resistance on the Dow several times, right? In the middle now you poked up. You had a higher high, sort of. I guess this would have been, let's see, last September, October, right? These few weeks here, you exceeded that high, and you exceeded this recent high, and so that's a little bit ominous looking. I mean, it's going to take a couple of weeks to play out, but notice how the MACD is starting to come down, and last couple times that MACD crossed to the downside, you had a pretty significant down cycle, and it's kind of, it's a little ominous looking. Look at the RSI there starting to turn down. What do you think of this? Is there such thing as a triple top?
Well, sure, there's a triple top, and we look for when the market tries to do something for the third time and either fails or succeeds. That usually is the tiebreaker there. Now, the only devil's advocate I would play with you as far from a technical standpoint is that big, deep sell-off that we had, that real big spiked low, which basically was like a giant flush, right? And so that I think that wrung out a lot of the weak hands, erased a lot of the sellers, and then we got the short squeeze off of it. So that could be, a big like spike and ledge type pattern as well. So this is one of those Rorsch test things, until it plays out in the future, but those are the two options basically. We could see this resistance level hold and the market go lower off of that, and then we can come back here in 6 weeks and say, yep, triple top. Or we see the market like get some support and like work its way, grind back up through that high and go on to new highs. So
Yeah, speaking of that, this pattern, this Dow on the weekly, looks really sort of similar to the S&P. Let me zoom back here. S&P on the monthly, like where you got, what kind of looked like, a similar, that's like a similar sort of pattern right there, although it did just rip right through it. Right, there was no. I guess you could say that there was a little bit of consolidation, but what makes this a little different is that when it did come up to the peak of the prior two levels, and this is the S&P monthly now, it just basically just it kept on a truck and right through it, never looked back. And so at the time though, when you got over here, you could have said, wow, this looks like a big area of resistance. But so anyway, that's that, and I guess we're just gonna see how it plays out. But going back to the daily chart, the close on Friday is going to be the most interesting thing. Like everything's sort of on hold, right? Because the reason for this little dip that we've seen here, and all of a sudden the volatility has picked up significantly, is because all this China trade deal stuff, right? Like last week they were saying that it was going to be a done deal by this Friday, and then all of a sudden it looks like it's fallen apart. But I believe the trade delegation is in Washington and they're doing whatever. So, but on Friday, supposedly new tariffs are going to go into effect, and so that could potentially spook the market. So we're gonna have to see what the close looks like and what the news cycle is, because this is sort of a news driven event we're seeing here.
yeah, I agree exactly. Uh, right. I mean, and here's the thing: at some point, whether the market, continues to climb from here and recovers and grinds back higher, or we continue to sell down, it's just a bigger setup, right? We have short-term pullbacks, we have medium pullbacks, and we have deep pullbacks, and then we get like the super mega deep pullbacks, which is that big spiked low that I was talking about.
Hmm.
Um,
Yeah, IWM, the Russell 2000 was starting to look pretty good here. It was breaking through this level of resistance, and then of course got turned back. But yeah, it's still kind of holding its little pattern here, and so a lot of people are really quick to get super bearish, right? And so I'll tell you what though, there's like a little support line here. If for some reason, and there's really no telling, but if for some reason this thing sort of resolves to the downside with one of those big long range days down, then it'll be time to maybe be concerned that we get a bigger pullback, kind of like the one that started last fall. So that's sort of what I'm watching for, and it's anybody's guess. But obviously, we're playing it one stock at a time. Which, speaking of that, I wanted to bounce over to the member homepage, and let's talk for a minute about closing these stocks ahead of earnings. Everybody knows that, I'm sure when they log in, it's kind of hard to miss this. But so check this out. We're at the tail end of earnings season, Jeffrey. Thank goodness, right? Like these three stocks that,
oh, that was fast.
well, I mean, typically the big companies start, right, within like a couple of weeks of the end of the quarter, which was March. But I mean, here we are.
I
Here we
just
are.
I had in my head we still had a while to go, but that's great.
Yeah,
Yeah.
yeah. Well, it's a relief for me because earnings season, quite frankly, creates a lot of chaos in our little system here, which is based on prices. Because, I mean, that's what earnings does. It creates chaos with stock prices, and so I'm just glad that it's winding down and pretty much over. So basically, once these three close, that's it. I mean, there's like a couple, there's like one here and one there over the next few weeks. So it's interesting. There's probably, I'm going to say like 10 or 15% of companies have some sort of really bizarre, weird earnings schedule that don't follow the calendar, and the other 90% of companies. And so there's always like, one floating around out there. But basically, this is going to be it. So once these three close, then that's going to be it. And quite frankly, I wanted to look at these three stocks just to have something to look at here. So let's start with the TTD, and I've already got it sort of marked up here. You know, here's something really interesting, and I thought we'd discuss this for a minute about why we close a company that's getting ready to come out with earnings at the open, right? Which does kind of make sense. I mean, I've sort of at first when you said, well, we're going to close these, you know, based on the open the day before they come out with earnings, I was kind of scratching my head, and you know, like you always say, things even out over the series and over time. And so, you know, a case like this, obviously, we're going to use today's open as the price that we closed this, right? So, you know, we're kind of shooting ourselves in the foot a little bit, but somebody at home now, you know, I was thinking about this morning. Somebody at home using a 5 minute chart, you basically wait the first 5 minutes and sort of protect the open and squeeze a little bit more out of it, right?
Yeah, well, the concept is this. I mean, you can close it out at any point during the day when you want to, right? Like if the stock opens and we have it on the list to close out that day, you have until the end of the session to close it out. So you can do whatever you want. If you get in there and you're watching like an intraday 5 minute chart and the stock starts rapidly moving to the upside first thing in the morning, you can get a stop in under the 5 minute lows and follow those up on little 5 minute pivot lows during the day and maybe squeeze out that much more, right?
Mm-hmm.
But you might have a stock that plummets right from the open, right? In which case, if you were protecting a 5 minute low intraday, you'd stop yourself out anyway. But from our systematic standpoint of just registering, the closeouts, we can't hem and haw over like, well, this one we would have followed up and this one we wouldn't have. So the easy way to do it is just close it out right at the open. Everybody has that exact same chance to get out at that point. So yeah, the system, and you're right, over this series, no matter how you trade or I trade or how we, make little different decisions here or there, over the big number series, it tends to average itself out, right? I mean, you might catch a great trade that I miss, and then have a stop out that I don't stop out on, and so you see it just gradually kind of evens out. So don't get hung out over how we register the don't get hung up over how we register the closeouts, because it's just that's the generic way to price to post.
Sure. What I was about to say is yesterday there was a whole bevy of stocks. I mean, like seven or something that got closed ahead of earnings right at the open, and that actually turned out to to be to one's advantage if they closed at the open because the market tanked yesterday, right? I mean, and so just like if this one's theoretically had closed yesterday at the open, it would have been to one's advantage to close it at the actual open. And so yeah, it all evens out, and it's just funny because I was thinking about that yesterday, how several of the stocks had decent opens and then actually, fairly significant down days, but they were closed ahead of earnings. Seen tons of earnings gap downs this time around, going through charts, and so it only makes sense to not hold over earnings if you're short-term swing trading. So
Yeah, I mean the thing about closing out before earnings, right? I mean, again, you can, if you want to like uh, flip the coin and hang on, it's your call. Uh, Plus, we've mentioned, if you get a really good run out of a stock and you take half off, and maybe you're up 15%, you take half off, right?
hmm
So that would mean the stock would have to gap 30% against you to cause a loss. So if you have a situation like that, then it's probably safe to be able to hold through earnings. But the reason it makes sense to just close them out, especially if you don't have much traction past your entry, is because the whole concept is we're preventing a higher probability of catastrophic loss, right? We know that there are Sometimes it's like a needle in a haystack, but it can be like a needle in a haystack, but sometimes some of these gap downs are humongous, and we've showed some on the show, right? So you're basically just kind of hedging your bets and preventing against that kind of a catastrophic gap. And you know, all these stocks are you can re-enter them too. That's a show we need to do is talk about like how where you'd look for add-ons or re-entries and
Yeah, this one made it. I mean, this one made it within spitting distance of the target, right? I mean, not quite, but last week it got really close on Friday, and then of course, we came into the market turmoil on Monday. So let's be closed today ahead of earnings using the open price, and it's having a pretty good day actually. Yeah, market's up a couple of points, so we're not falling out of bed yet. But what I was going to say on this is that there's also, I don't have the parabolic stop marked on here, but 222.60. I'm going to guess that that parabolic stop would have kicked in probably right under this low. And so, kind of like we talked about a couple of weeks ago, you had a situation where you were kind of sandwiched in between the target and the parabolic stop. And so that would have been a pretty good spot there. This is one of those tech high flying stocks or whatever, and this looks like the last earnings reaction. And I've looked at so many charts trying to glean whether I thought you were going to get a big move up or down, and sometimes you'll see a stock that literally gaps up every time earnings are released, right? And those are pretty powerful stocks. I mean, they have a consistent habit of gapping. Like, here's an example, right? I just speak of the devil. Look at this. I can't guarantee that this was an earnings gap, but it sort of looks like one. But look at this: huge earnings gap up, huge earnings gap up, um, huge earnings gap up. So it's going to be interesting to see what happens with this.
yeah, typically if you get a stock that has a positive earnings gap up, and then you typically will see a big like volume spike as well, right? Although that big buying pressure came in, um, what you do is you put a horizontal line below the low of the gap up day, right? The big long range day, and as if the stock starts to pull back and gets, anywhere midway back down or back down in the lower quadrant there towards that low, you can look for a buying opportunity. You basically look for some narrow range days to form maybe a doji day. And a lot of times you can pick up an entry there above the high of like a real narrow range, like maybe inside day. And that's how you can time, playing post earnings release.
Yeah, there's certain stocks, and this is one actually that you get these. Well, on this particular one, it did manage to come back down and poke below earnings. Obviously, that was last fall, but I see plenty of stocks looking through the charts that you get an earnings pop like this, and it just never looks back. And you can zoom way out on the chart, go back a couple of years, and you see that you got the big earnings gap up, and then whatever it did subsequently, it never went below, never filled the gap, and just kept on going. So it's kind of interesting. But here's something else I wanted to mention. This particular one is these guys. TTD is releasing earnings tomorrow morning before the bell, and so the way that we kind of have it set up, and you can just go by the symbols that I put there on the home page. And it's not always not a bad idea to double check yourself in case I make a mistake or in case I get some bad data. But so regardless of whether they were releasing earnings like today after the bell, we would still close it today at the open. Or if they're releasing tomorrow before the market opens, then obviously we want to close it today, right, at the open, just to keep things consistent. So that was one of the things I was a little confused about when we went through our first earnings season. I got a little bit confused about how we were doing it based on whether they were releasing after the bell or before the market open or whatever. I'm gonna say like 80% of stocks release after the bell, and then you get these weird ones like this that's gonna come out with earnings, first thing tomorrow morning. So anyway, so there was a couple of more. Let's see. Let me go back here to the home page. Etsy. Working my way backwards. Let's see what Etsy looks like. ETSY. Yeah, this is gonna be one of those like kind of wash type things here. Using today's open. Interestingly enough, it like opened right around the trigger price here. Boy, this thing's volatile. This Etsy is extremely volatile. It's got a good looking pattern though. I don't remember if I drew a downtrend line across this before, but this is a pretty. I mean, this is a pretty decent looking chart here. That looks like the last earnings move back here in February, but yeah, kind of hem-hawed around, and with the market turmoil that we've had here recently, we had a long range day down yesterday. It was sort of on its way to doing great things, right? The trigger here, 66.65, it got up to about $70, and it just kind of dipped down a little bit. So anyway, the other cool thing, and here's the last one. This ARNA. This one's held up pretty well. As a matter of fact, yesterday when the rest of the market was having a big down day. The Dow was down like 600 and something points yesterday. We haven't seen that in in a long time. So, but anyway, this one seemed to have held up pretty well, and so closing this thing here ahead of earnings today is gonna do okay. This one's kind of interesting because the way that it was kind of in this little up cycle when it triggered, and then all of a sudden it kind of had a couple of big down days and then turned right back around. So it's interesting to see that the current trailing stop is still sort of way down here, right? It hadn't quite made. My guess is if we didn't close this today, that stop would probably get trailed up to about break even after the close.
Yeah, on that particular pattern, you're going to start seeing the stop move up. But like you said, we're going to be closing it out, so it's a mood issue.
Yeah, I've noticed that the stop losses are not just a function of price, but also time, which is really kind of interesting because most people don't really think about that when they talk about stop losses, right? I mean, they're always looking at like support or resistance on a chart or some prior lows or or something, and it's kind of we call them dynamic trailing stops, and I've found it's sort of interesting that time does play a factor as far as the system on the back end actually moving the stops. So that's kind of interesting.
Yeah, the trailing stop, the way we've got it designed is, see, here's the issue with the trailing stop. You got to have a stop because that prevents catastrophic loss. Uh, Stops are kind of a necessary evil in that regard because they can work for us or they can work against us. So the trick is the correct placement and enough wiggle room to let the swing trading setup digest everything and take off. So, as we've mentioned in previous shows, we get two flavors of follow through. We get the rapid takeoff, stock blasts off and never looks back. And then we get stocks that kind of hem haw around and have a tug of war around your entry zone, around the trigger level. And some of those just need time to germinate, right? To build support and break, eat through all the selling, and then they basically launch off. So one of the issues we face is we've got to give the uh, we've got to give the setup enough wiggle room and enough time to be able to germinate and take off, right? And not, that's why you don't want to move your stop too quickly. The only exception to that is if you're going to play the 3-day rule, the three higher lows,
Hmm.
and you
Hmm.
want to get to break even or move to break even on half, that's fine. But generally the trailing stop has to, so it's doing two functions. One is it prevents against catastrophic loss, but on the other hand, it's got to give it the setup enough wiggle room. So it has to move in a very gingerly way to avoid getting tagged. uh, If the stop is too close on all your trades, you're going to die the death of 1,000 cuts, right? You just get
Hmm.
stopped out every time for a loss, and then the damn thing takes off and works. If the stops are way too far away, uh, you'll go ahead and avoid a lot of that minutia on some of the trades, but then when it finally gets hit, it equals all your mini stop outs. So it's a trippy thing to manage these stops, but the system does a pretty darn good job at it.
It
It
really
uses
does. I brought this ANF up. I think this is probably one of the better examples of an open trade about how that stop sort of gets ratcheted around there.
Yeah, and again, we've talked about this in previous shows. There's multiple types of logic that drive the initial trailing stop, and then there's several kinds of logic that drive the parabolic stops that get generated. So it's a complex analysis that we use. It's not just trailing X number of bars behind or anything like that. Uh, there's more to it, and but the we're going to get lots of different flavors of follow through. We're going to get absolute um, spiky and erratic type of behavior after, and then it's going to run down and hit the full stop. That's just the nature of playing the game. And like I said, then we get some that just take off right out of the gate and never look back, and the stop, before you know it, that trailing stop is at your entry level, right? So you're pretty much break even. So it's all about just playing through the series.
Yeah, this one's kind of interesting because this was one of the ones where I typically I start the trailing stop. I believe I the trailing stop is like typically like right in the middle of these things that I draw. So it's kind of funky using this charting software, like being able to draw these things on here. And some of them I've seen literally move like ratchet up a real small amount almost every single day, right? And a lot depends on the pattern, but this one was a little unusual because the initial stop got moved up relatively quickly. I mean, I'm going to say like a couple of days later, and then it kind of held on for a while through all this, and then made it up to almost break even. So yeah, this is kind of an interesting one. This has had two parabolic stops that kicked in, and then the third one finally got tagged way up here. So yeah, this is actually probably one of our better open trades right now. So this is looking pretty good. And the interesting thing is the current trailing stop, like you were saying. I thought that this was, when I was looking through some of these examples to bring on the show, I thought this one was fascinating because of how it was just far enough back so that that big long range day down, you get a big huge market day down like we haven't had in months, right? Actually, we haven't seen a down day like yesterday in months. And it managed to somehow or other, it just sort of managed to be just far enough back that it didn't get knocked out. And so, one of two things could have happened today, right? Like the market could have opened and resumed the big down move, which it still could, right? And this could have got knocked out, but, so far so good. And of course, it hit the target, and there's, been plenty of opportunity to take some off. So this is looking pretty good. I was going to look and see if and when the earnings are on this one. Earnings on this are on 5/29 before the open, so that's way out here in the future. So my guess is we won't be closing this one ahead of earnings unless it just happens to start going up from here and keep going. But anyhow, so that's kind of interesting. Here's something, and I know you and I talked about this a couple times. I wanted to bring this anomaly, VCYT. Wanted to talk about this little sort of anomaly here, and this is an unusual case, and so I thought it would be interesting to just mention it here for a second, right? So here's what happened. The trigger line on this was 2390, which is where I have this green zone here. So check it out. So triggered line at 2390. This day it gaps over it, has this humongous long range day, and closes way up here, right? And so this particular day, this stock would have showed up on the triggered today list. So the next morning, you're thinking, okay, well, I mean, if you were interested, obviously that's a huge gap up, and that could have very well been earnings. That's another thing I was going to mention is that during earnings season, another thing that's kind of a pesky little thing but unavoidable is that some of our stocks get triggered in, because it had an earnings beat, or I should say a positive reaction to earnings, and so that causes the stock to spike up real big over the trigger line in this case. But so here's the interesting thing about this, Jeffrey, and I know you're aware of this, but I thought it would be something to mention in case somebody does run across this in the future. So the next morning, look at that open. That open was way below the trigger line, and so the idea here is that when a stock triggers, you're looking for it to be trading above the trigger line the following day, correct? In this case, the stock opens way below the trigger line. It pulls back in the morning, like you go to a five. It was kind of an anomaly too, right? Like you go to a 5 minute chart, it had a big gap down, and then sort of spiked down right to basically like the low was right where the stop was, 25.25, right? But it hadn't triggered yet, right? Like the stock, the very first 5 minute bar was one of those really weird sort of, like a flash crash. Maybe there was like one trade or something that was an anomaly. And so my point here is that the valid entry would have been like right
After
there.
that stop area would have got hit, which you're not even in the trade yet.
Exactly,
Yeah,
exactly.
so this is a good example of like some of the real fine-tuning minutia of the back end system, and that's like a little area. So I got that notated. I got to get in there and write some code to allow that a little exception of the rule. Um,
Yeah, no
so
big no
yeah,
big deal because I think that an anomaly like this that's going to come along, once in a blue moon or whatever, we can typically catch it by looking through the charts. But like what I wanted to point out is in real life, so you're seeing this on the triggered today list here. You get up the next morning, it's trading below the trigger. You don't want to jump in until because this thing could have opened down here and never made it back above the trigger, in which case it would never have been like an actual valid trade. And
right,
so,
right, yeah.
yeah,
You want to take the entries above the trigger line.
yeah, yeah. So,
So
yeah. So
it,
anyway, yeah. I mean, this is a good-looking stock. It really is. Big run up, little bit of a consolidation. It's interesting that that trailing stop seems to be like right there at this huge level of support. And so, this is just one of those cases where you always talk about putting the odds in your favor, right? And so this seems pretty reasonable to me, notwithstanding that kind of weird anomaly, but the fact that, it's a strong stock, big uptrend, came down, and you got to stop right there at the support levels. It looks like that level got tagged maybe 4 times or whatever, right in that general area. So if this thing, is destined to break down or whatever, like if this is a big topping pattern, then obviously you don't want to be in it here. But still not looking too bad. Hey, let me ask you, just out of curiosity, suppose that there's been a lot of open trades have gotten closed over earnings, and we've had with the turmoil the last week or so, we've had a bunch of small stop outs too, which is kind of it's like a cleansing process, right? Earnings season is actually like sort of a I'm glad that we do it this way, that we decided to do it this way for obvious reasons, but another sort of benefit to it is that, it locks in profits on, the stocks that have done pretty well. And then there's those cases where, maybe a trade was open for, a week or something, and then you have to close it ahead of earnings at, a small loss or round break even or a small gain or whatever. But it basically allows all the stocks to sort of cycle through, get closed, and create like new opportunities. And so, we talked about weeding out like when you get these little pullbacks, you weed out the stocks that don't follow through. But the earnings process kind of weeds everything out too.
yeah, and a lot of these stocks, maybe what you were working towards there is a lot of these stocks will recycle. So, for instance, if we get a closeout on an earnings release and the stock ends up, you know, well, either way, positive or negative, down the road, they can show right back up in the pending list, as long as the overall upward momentum is maintained on the daily and the weekly time frames. So,
I've seen
uh,
that. I've
yeah,
seen a few stocks where we're on like the second go round with them, right?
sure, yeah. If you go into the close, you'll see a bunch of them that have gone through several times.
Oh, so what I was gonna ask you is it valid? And obviously, if you bought it at the trigger line this morning, you're thinking, "Oh man, I should have waited." But let me ask you this: would it potentially be valid, like, to get into one of these positions above the trigger, like maybe a few days later or a week later? I mean, you're going through and you're looking at some of the open trades, and you happen to notice that this one's a little bit erratic, but just out of curiosity, would it is that trigger line like still valid? And say, potentially like tomorrow or later today, we see these days where in the morning the stock's weak, and then you get a big afternoon rally and it goes green. So my question
Yeah,
is it still would it still be valid to enter a stock, maybe, as it's pushing above the trigger line days after it might have triggered?
sure. The answer is yes, because uh, think of that trigger line as, a line in the sand and a balance point for the swing cycle. And I just mentioned earlier, some of we get the two flavors. Some of them just take off, smooth as silk and take off and never look back. And others uh, have a tug of war right around that balance point. So you can see this one here is a perfect example how you had the gap up and the run up above the line in the sand, and then it
Hmm.
it came all the way back down, and then it jerked back above, and now it's working down. There's your tug of war right at the line in the sand, right? Now, um, this is actually kind of a perfect example. Uh, you could have went ahead and said on that very second day, like, okay, we closed right back above the trigger line, so I'm in, right?
Hmm.
And that's valid. Uh, if you were waiting, or you maybe wanted to do an add-on, or maybe whatever, you'd look for a narrow range day that is around the trigger line. So like the current day that we're looking at is perfect. You see how it's kind of a narrow range inside day, and the high is just above the trigger line.
Yep.
So there's your little micro line in the sand above that high,
Yeah,
right?
sort of like putting a little entry like just above today's high is what you're saying.
Exactly. So that would be that's another logical, because basically here's what you're doing. If we get this tug of war over several day period around that balance point, we're waiting for the dust to settle and things to kind of go back into balance. So if you can key off of a narrow range day, then you've got another little low probability, you got a low risk, higher probability entry. um, and you could even go so far as to take the entry above the high and put your stop right below the low there. So think of these trigger lines. It's not just a one-day thing. It's more of a balance point in the whole big swing trading cycle and the swing trading setup. And again, some of the stocks take off right away and move away from, in our favor, away from that trigger line, and then others get bogged down in the tug of war action before they resolve themselves one way or the other, right? The stock could, uh, you know, build up support again and make another run to the upside, or we could see it like, you know, head to the downside. So,
Interesting. All right, so one last example here that I want to look at. This is going to be interesting. Cray, right? This is the only stock that triggered is basically triggering today, right? So this is the only stock on the triggered today list, and obviously what's happened here, like this was the trigger line 2685, right? And so yesterday. And I mean, it's all programmed, right? I mean, obviously, this is kind of crazy looking, but the stock, broke or closed above the trigger line yesterday, so it's on the triggered today trades. And that doesn't necessarily mean when you look at a chart like this, big, giant, long range day, gap way over the trigger. Obviously, that doesn't mean that you just want to jump in. And this is one of the things a lot of people ask when they first come in is, okay, how big a gap is too big over the trigger? And so but what's more interesting about this is what it's doing today. Right? And so, do you want to talk a little bit about, what you would look for as far as this? I mean, would you just pass it up? Would you maybe consider, giving it a couple days and, maybe getting in at the trigger? I mean, these ranges right here are tremendous, and so I'm gonna go and look and see what the just out of curiosity, I want to see what the target is. The target 2840 is right, which is where it is right now. I mean, literally, like based on what the system calculated. See, the system obviously didn't know ahead of time that that it was going to have this wild move here, right? And so, it's just calculating what it's supposed to calculate, but stocks behave crazy over earnings.
Well, if you are going to be playing, big positions on single swing trades, like a sniper approach, and you're focusing on one trade at a time type of an approach, and you're betting big, then this would be one that you would want to maybe be a little bit suspect, right? There's just a little, you got long range bars you're dealing with, and you got the gappy action, and so you'd probably want to hold off for a little bit and see how the dust settles. If you're playing the system where you're diversifying and you're using the fixed risk calculator, then remember when you fill that fixed risk calculator out, what you're doing is you're using your entry and the stop, and it's computing a fixed risk and telling you how many shares to buy. So you might, there's no more risk in taking the trade, even if you buy a little higher than because it's gonna adjust the number of shares you're buying down to be the same risk. So it ends up, again, remember the trigger line is a balance point. When price gets above that, we tend to statistically get movement in our favor, period. So if you're going to play it statistically, then yeah, you could go ahead and just take your entry and use the fixed risk calculator. The other little thing you can do, which we've mentioned, is you don't have to go all in. On something like this, you can go, hey, I like this company. I think it's going to go higher based on the chart. We got a little bit of funky action here with the move past the trigger. I'm going to take half the position and do a wait and see on adding in the rest.
So would it also be valid to just like kind of set a limit order here at this trigger price and just see if you get filled over the next couple of days?
Sure, you could do that. That's another option you can do. And then remember if you're using the fixed risk calculator, it's going to be the same risk.
Yeah, so
You're going to get
what you're saying is
you'll get to buy more shares. It'll just be the same risk,
so basically
dollar
what
risk.
you're saying is like if you're using say $100, fixed risk on it, then basically, whether you entered here and you got your stop down here, it's or whether you set a limit order and get filled here, whatever. It's basically based on your entry and the stop, you're risking $100 no matter what, and so the variable is how many shares that you're actually buying, right? So that's the variable, how many shares that you would
If
buy
you're
to risk
if you're
$100.
following if you're using the fixed risk calculator and doing the diversification, yeah.
Gotcha, gotcha. Well, that's pretty interesting. So, yeah, I mean, to sort of sum up today's show, and the other thing is that we have mentioned this. We used to mention this way back at the beginning of the start of this. Is that if a stock happens to like close way, 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 way past the trigger line, the day that it triggers, like obviously you can see this is the target, right? So I mean, ahead of this big pop right here. Everything was calculated out that it would trigger here and then it could work its way up to this target and here was the stop and all that. And so obviously, earnings season sort of throws a monkey wrench into all that stuff. And so there you go. That's why we're not huge fans of the price action around earnings season. It's a double-edged sword. So there's a couple of interesting examples today, anomalies, I should say. And now that earnings season's over, this is all going to start to wind down. Prices should start to get back to normal. So I'm going to go ahead and wrap this up. Got some stuff to take care of today. And so, hey, thanks for coming on, Jeffrey. It was an interesting show today. Covered a few
N-
things, and
no problem. We'll see you next week.
all right, see you guys next week.